Good evening and welcome to another free Shadow Trader webinar. Pretty excited to have Ben Lee back with us again. This is how to stop your mind from stealing from you part 2, and it's going to be all about consistency. So without further ado, I give you Benjamin Lee, Shadow Trader's Director of Trading Psychology.
Thank you very much, Peter. All right, let's just get into it instead of just waiting, because I have at least 3 different strategies I want to share with you today, so I want to make sure I get through all of them. Just a very quick disclaimer, just quick housekeeping. The high risk warning, futures, forex, and options trading has large potential rewards, but also large potential risks. The high degree of leverage can work against you as well as for you. You must be aware of the risks of investing in forex, futures, and options, and be willing to accept them in order to trade in these markets. Forex, futures, and options trading involves substantial risk and of loss, and is not suitable for all investors. Please do not trade with borrowed money or money you cannot afford to lose. Any commentary, strategies, tools, opinions, news, research, analysis, price, or other information contained in this presentation is provided as general market or trading psychology commentary and does not constitute investment advice. Shadow Trader or its affiliates will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from the use of or reliance on such information. Please remember that the past performance of any trading system or methodology is not necessarily indicative of future results. Okay, now that that's over, let's get straight into it. So what I did here is I wanted to take a look at several case studies, and obviously these are emails that you all have sent to us, and I just want to go through each one of them, and then from there I want to discuss with you what you guys think is possibly the issue and how we can correct them. All right, so obviously here, number 1, hi Peter. My number 1 issue is consistency. I am disciplined and do everything right and lose all my profit plus more in one day. I'm sure a lot of you have that issue. Doesn't really give us too much information there. So let's take a look at the second one. I have come to the conclusion my number 1 hurdle is not getting out of a losing trade in time. I primarily sell naked strategies or naked directionally. I find that sometimes I bail too soon and regret it the next day, or hold on to see losses continue to build until I finally capitulate with the loss, often regretting that the next day. I have been stuck at an equity value for about a year now, advancing with success and failing or falling back due to holding on and finally capitulating. So what do you guys think here? What do you think is the actual issue here? And again, it's really about reading between the lines. If you guys can just kind of type in your responses into the question box, that'd be great, so we can at least get a dialogue going here. Because obviously, with these emails, I'm sure some of you that have written these emails are actually here, and sometimes at some point you will come up with the same challenges. So the reason why I want to discuss it and have a actual back and forth with you and just kind of open it up is really because you guys will come up against this at some point in time. So a couple of the answers are fear, sounds like me, confidence, emotional trading, not following plan, does not have a plan, discipline, lack of plan, no exits, not settling or using stops, takes risks with naked positions but not confident remain, not having a clear understanding of risk versus reward, fear, this person does not have a trade plan. Okay, great, awesome. And we'll definitely look at a couple strategies that will help you to begin to see where you won't have those losing trades necessarily, or you might not bail too soon. You'll have a really solid idea of the market conditions and what's occurring that may support the trade, right, or may work against your trade. So let's take a look at the next one. Hi, I just read your weekend update, and this is my response to your ask for our top trading problem. The trades in which I lose a lot of money is when I lock into a direction. When a trade starts to go against me, I don't close a trade. I trade 100% options, mostly vertical spreads. For example, last November, I thought a rut trend was bearish. I put on short call spreads. As the rut moved higher, I kept closing my losers and putting on short call spreads higher, thinking it wouldn't go much higher. By the time the rut leveled off, I lost a lot and realized my mistake. All the emotions that come with being wrong flooded me. My error was simple. I married a belief in a trend and would not let go in fear of taking a loss early and then being wrong. I feared if I reversed, put on short put spreads, I would be wrong. I don't know when to get out. So what about this? So this is kind of the same thing, right? But obviously just a little bit different. And the main thing you need to understand with regard to trading psychology is you might have a particular cause, right? But it'll manifest or it'll result in something different. So what I'm saying is, the person in the previous email could have the exact same challenge as this person, right? It's not necessarily exactly the same, but the way I try to look at trading is through an entire holistic approach, and I'll go through this in the next webinar, in webinar 3, in how to become a master trader. Because I think it was the last webinar where somebody asked if there was a magic pill that would solve a particular issue. But it's not about one strategy. It's about understanding all of the different pieces of your psychology, your trading system, and building systems to remove any type of uncertainty, to help build confidence, to be able to overcome any trading losses. Because if you carry any negative charge with you to the next trade, then there's a high probability that you have another bad trade. And then that kind of cascades down into a losing day, and then several losing days, and then all of a sudden you lose confidence, and you can't tell what's up and what's down, and you lose all confidence. So really, it's about understanding everything that goes into trading and into trading psychology. So once you can do that, then the ability for you to correct your own mistakes becomes significantly easier. So let's see here. What were some of the responses here? This person does not have trade plan. Okay, so again, all right. So let's take a look at the next one. So in response to providing you with the #1 trading psychology issue I'm facing as a trader is the fear of putting on new trades, which is caused by my fear of losing money, which is itself caused by paralysis analysis. It goes deep. I think I could get better at it by defining a good trading plan or simplify my decision by using less indicators. As my trades have defined entries and all my trades have defined entries and exit points. I use limit orders when taking profit, but not automatic sell losses, as I want to avoid whipsaws. I trade stocks and options. I mostly use defined risk options, but might put on undefined risk strategies like strangle or naked puts. The sad part is those undefined risk strategies ends up to be the most profitable ones, but also the most destructive ones due to their nature and perhaps not having discipline to take the loss when I get a reasonable chance. I find it is harder to take on new trades when my account is showing positive returns, as I don't want to give back what I just earned. I am risking no more than 2% on each trade. My win rate is 60% for all strategies combined, but my gains are modest. My naked put strategy win rate is 82% for 2016 and in the green. I am having more success in the Forex market because I think my trading system is fairly simple and quite mechanical. I do find the Forex market to be less gappy and more trending than stock or commodities. Okay, so what do you think here is maybe one of the challenges or several of the challenges of this particular trader? So cognitive dissonance. Okay. For this particular trader, it sounds like they need to identify what their trading personality is, because if you haven't identified exactly what kind of person you are with regards to, do you like day trading? Do you like being in the action all the time? Would you rather be a set it and forget it kind of person? Would you like to trade options? Would you like to trade futures? Would you like to trade Forex? And it really depends on how you actually want to interact with the market. Because if you're not if you're not a person to actually, be in front of a computer for hours and hours on end, then obviously you shouldn't be a day trader. When I first started trading, I was actually trading weekly options. So I would trade, I'd put on a trade, and then I just kind of sit around doing nothing. And I realized that I couldn't really learn as much, and I wanted to be more interactive with the market. So I decided to, move my time frame down to a day trader. And that's when I really started to, trade a lot. And then I started understanding the more trades I took, the more information I could gain at a much quicker rate. Because if you're only putting on a trade or two a month, your learning curve is going to be significantly longer than a day trader that's taking 2, 3, 4, 5, 6, 7 trades a day. Right? At least you can go through. You can practice a lot more. In other words. And also with this particular person, let's see here. They're doing several different strategies. It seems like they're doing naked put strategies, and then also they need to identify a solid trading plan, and I'll talk about that later on in the webinar. Okay. And then another one, my number one psychological issue on full mind mess, total whole news bar, is my ability to cut losers early. How many of you have that challenge with cutting losers early? It seems like a lot of people have mentioned that throughout the the emails that I've read already. How many of you do that? How many of you get out of trades too early too? Good trades. Okay. So yeah, basically everyone. Okay. And then let's see here. My biggest psychological issue pops up pretty infrequently, and they don't really have anything to do with discipline at all. My biggest issue lies in looking at one type of setup and being so focused on it that I miss a trade of the opposite sentiment that sets up and triggers. So how do you not have a bias? And again, we'll talk about that in a little bit. And I shadow trader. A little background regarding myself. I have a small trading account. I'm at the point where I feel stuck in the mud, meaning I get ahead a few $100s and I get relaxed and make high-risk trades, being greedy, and lose all my profits. Again, same thing, right? How do you get to the point where you're consistently taking money from the market instead of doing a couple good days and then giving it back, doing 10 good days and giving it back, doing a good month or two and then giving it back, right? So how do you get to the point where you're consistent and then you don't have these days that always seem to kind of bring you back to square one? Okay, so the three strategies I'm talking about in this webinar are the trading criteria, the daily trading plan, and the trading business plan. The trading criteria is an identification of every single trade setup that you have to an extremely granular level. So I'm going to go ahead and pop it up on the screen. Give me a second. If I can move it, here we are. Oop, that didn't work. Let's see if, there we are. Oop, it's not really working. Okay, there we are. Better. Okay, so this here is my trade criteria. As you can see, it's 19 pages long. Okay, so this identifies every single trade setup that I take when I'm day trading. Okay. So it all starts with this particular trade. So the low volume area counter trend trade. So if you guys are familiar with Dalton, I take it one step further where I look at volume and how a low volume area typically rejects price. In other words, as price starts to approach a low volume area, I expect one of two things to occur. I expect price to either just break through it or to bounce off of it, because if there's low volume over a certain given period of time at a particular price, that means market participants don't agree that it's a fair price, right? So if you have a high volume area, it's the exact opposite. If there's a lot of volume there, that means market participants agree it's a fair price, and they transact a lot of business there. So if you look on a x-axis, right, of all the volume throughout the different prices, you'll see just basically bell curves. right? So at a high volume area, you see a lot of transaction taking place, and then obviously at a low volume area, you see not many taking place. So this is one of the backbones of my trading system. So the first thing I identify is market principles. What are the market principles that support this particular trade? So for me, it's a bidirectional auction. As price moves up, it goes down. Basically, it's a wave. The higher price moves up, you have the same more or less energy on the way down. Okay, so basically, it's just buyers going up, and then eventually, as they lose momentum, then sellers will step in, and they'll push price down because they believe value is lower. Okay, that's basically how the market works. And then looking at that, my belief is that when it comes to a low volume area, then counter trend participants have stepped away from the unfair prices and step in where they see good value. Okay, then I believe that the market's sole purpose is to facilitate trade. That's the whole reason why the market's here, right? And when price is rejected at an unfair price, right, what'll happen is based on the market's purpose of facilitating trade, price will move back to an area that's fair or a high volume area, right? So basically, these are the market principles, that I believe support my trade. Okay, so once you can identify those market principles, then at least you have an idea of the basics and the fundamentals of market conditions that support your trade. Then the second piece is, when is this trade best used? Right. So identify what it is specifically. Right. Low volume areas on a weekly or longer composite, confluence multiple time frames, and what that means is if I can find a low volume area that's on a daily, on a weekly, on a yearly, in 5-year or 7-year chart, then that's a really strong area, right? And then I want to see exhaustion or responsive buying or selling or counter trend action, and then a finish to the volume profile, right? So as I see all of this occurring, right, if I have only a handful of these items that are present in the market, then what I can do is I can say, well, not everything's lining up. If I can't check up all these boxes, I can either allow the trade to go by, or if I think that there's still a good opportunity here, I can reduce my risk and take a smaller position size. Okay. So from there, I go through the entire synopsis of the trade. In other words, I talk about what happens before, during, and after the trade. You should be able to identify all of these pieces. And then from there, what charts are needed. And then trade prep. How do I prepare for the trade? What do I need to do? How I enter the trade, right? What I'm looking for as the setup. If no volume comes in to push price through the low volume area, then enter as a reversal, and then I go in as a market order. Okay, do not miss this trade. And then if responsive counter trend action comes in strong volume, then enter the trade as a reversal in the opposite direction. So that's what I look for this particular trade. And then lastly, how I actually manage this trade. I look for areas to exit, right? So I identify support and resistance depending on, if it's a buy or a sell. I look for high volume areas, low volume areas, volume point of control and point of controls, and significant day time frame levels. And, just like Dalton, I monitor for continuation. That's the exact same thing. Right? And then I use tick and then, several other structural reference points, and, where am I looking for, and, where can I see the market flowing to? Okay, so that's basically the trading criteria. And as I mentioned earlier, I do this for every single trade I have. How many people do this? How many people have done this at all, other than Peter, obviously? How many people have actually done this? Okay, so far, nope. Okay, I got one. Yeah, that's good. Okay, one. All right, that's good. Somewhat. Need two. Okay. Not nearly to this extent. Okay. Well, here's what you can do if you're not confident about exiting losing trades, right? If you're not confident about entering trades, if you have any type of uncertainty with your trade setups, you need to be able to put this together to this degree. And the reason why is because this will tell you what holes you have in your knowledge for your trading system. If you can't identify all of these pieces, then you don't know your trading system well enough. And whose responsibility is it to know their trading system? It's obviously yours, right? Peter can go through his trading system like this. I can go through my trading system like this. And so that's why we can get in and out of trades so quickly, and we don't have any doubt in our mind, because we understand all of these pieces that basically flow into our trade setups. Okay, so if somebody asked me, is this available for download? It is, but it's in the course. Okay, so I tell you, exactly how to do all of this, in module 3 of the trading psychology series. This entire page is Greek to me. Okay, well, obviously this is specific for my trading system, so I'm sure you would have something a little different. Depending on what you're doing. And it works with basically everything. You can use it for Forex, you can use it for futures, you can use it for options, you can use it for stocks. All it is identifying the trade setups and then, like I said, the market conditions that support it. Okay, so let's take a look at the daily trading plan. Okay. Excuse me 1 second. Question at the beginning, are you missing trades? You're always going to miss trades. It's okay, because here's the thing that's different between, let's say, somebody that's a professional trader or a master trader and somebody that's starting out. Every beginning trader has a fear of missing out. They look at the market and they say, oh, I could have gotten this trade. Look at how much I missed. Okay, they're always coming from a place of scarcity, because they don't understand that the market, really it's an infinite number of opportunities. Okay, the difference between a master trader, they've completely reframed the market, and they said, listen, throughout my career, let's say my career is 20, 30, or 40 years long. Okay, how many trades am I going to take? I'll probably take, if I'm a day trader, anywhere between, let's say, 5 day trades per day, right? With 250 opportunities, that's 1,250 over a 30-year span. That's over close to 36,000 trades that you can possibly get in and out of. Okay, so if there's an opportunity that you're not necessarily 100% focused on, or somebody calls you, or for some reason you're just, like I said, not 100% focused, it's okay to miss a trade, because there are so many trades that are coming in the pipeline that I don't ever feel like I've missed out on anything. And hopefully that makes sense. Okay, so this here is my daily trading plan. So this is what I do before every single trading day. So it goes through what instrument, what the previous chart date was, what the instrument is, what the opening was, right? Did it open inside of the value area, or did it open outside of value? Inside or outside? Did it open inside or outside of range? What kind of opening type was it? This particular day was an open rejection reverse. What the opening swing high and swing low was. What that point range is. What the initial balance is. And then what that range was, and then if there's extension above or below. Okay. And then what the close was, did it close inside or outside of value? What the closing balance was, price range was, value area high, value area low. Did value area migrate higher? Did it migrate lower? Was it overlapping higher? Was it overlapping lower? What the VPOC is, what the POC is, did that migrate? And then all of the market profile data points. What was the afternoon rally high or pullback low? Were there any anomalies in the TPOs? Was the market buying breaks or selling rallies? Is there excess or a 45-degree line? Are there any gaps in play? Is it one time framing from the short term and from a long-term perspective. Are there any poor highs or poor lows? What the short-term inventory is, if there's any spike bases, tempo of move, time frame and control. Is there value migration with price? Is there VPOC or POC migration with price, or is VIX higher and lower? And so you see, there's a lot of data here, right? And again, when it comes to confidence, somebody that puts in the time and understands this, right? It's much easier for them to execute the trades to perfection. Does that make sense? Hopefully this is starting to make sense to you guys. Question, do you fill this out as the day progresses? No, all this is done before I start trading. All this is done. I have notes that I do on an hourly basis just to give me an indication, of I guess you can say, I have it somewhere, I'll have to look it up. It actually primes me with certain questions at every hour just to make sure I'm not missing anything in the market. Because sometimes when you get kind of focused in on a certain area, you kind of forget other areas as well. A great example of that is, when you get into a trade and it starts going against you. I spoke about this the other day. Your mind will begin to look for information that supports your trade. Because again, from an ego standpoint and from a subconscious standpoint, it's there to protect you from pain. So let me show you exactly what occurs. Hold on, let me see if I can find this. Give me 1 second. Beautiful, I have it right here. Okay. So this here is the neuro-linguistic programming communication model. Okay, so basically what this shows is you have your 5 senses: visual, auditory, kinesthetic, olfactory, and gustatory. So that's basically visual, hearing, touch, smell, and taste. Well, yeah, smell and taste, yes. So at any second, you're receiving several million bits of information at any particular point in time. So 2 to 4 million bits of info per second that flows into any of the 5 senses, okay? What occurs is that so much information that your mind can't handle it. So it has to filter that information down to a manageable chunk, right? So it filters, it deletes, it generalizes, deletes, or distorts, and there's a whole representation, we don't have to go through all that, into just 134 bits. So 2 to 4 million bits to 134 bits a second. So whenever you guys are married to a particular idea, right, what will happen is your mind will start deleting, distorting, or generalizing information that shows that the market is trying to tell you, hey, you need to get out of this trade because the market's going in the opposite direction. Okay. And that was specific to, I believe, the 3rd or 4th email that we had spoken about. Why 134 bits? That's a good question. I never actually got to the scientific basis of that. But I will find that out, though. I think that's what they found out. And a great example of that is, I guess you can say, people on the autistic spectrum. From what I understand, some of them can't actually delete, distort, or generalize like normal people can. So that's why it's the world is such a, it's so harsh on them, because they're not able to do the same filtering that we can. Okay, so back to the trading plan here. So the sentiment of the day was it rotating, midterm and long term, and consolidation. Okay, so that's just the first piece of information. Okay, then we go to the second piece, and this here is all my, I guess you can say, my volume composite information. So as I spoke about earlier, high volume and low volume areas, right? So I want to identify the ones that are closest to the close of the previous day, because within the probability of these levels being in play are greater than any other. So you can with the ES, typically 4 works the best. For Forex or something crazy like oil, you might need 8 or 10 levels. So identify the high volume areas on different time frames. So daily, midterm, 5-year, 7-year, and on Globex. Okay. Since we're in new territory, the 5 and 7 year, they're all the same, so it really doesn't matter. What I mean by convergence or confluence is when there's levels throughout multiple time frames that match. So right here, this is pretty close. So 2367.50, 2366, and 2366.75. So they're pretty close. And they're 22. So that right there is convergence or confluence. You can use it as either term. So what I mean there, that level is going to be stronger than one that's only on a daily time frame. Okay, and the same thing for low volume areas. Then here I go through the monthly, weekly, and daily levels. So what I'll do is I'll just turn it to a weekly or monthly or daily chart, and then I'll look at the significant levels above, significant levels below, and through the different time frames. And I'll look for balance areas, and then also if there's excess above on a certain time frame, if there's a poor high or poor low on a certain time frame. So I identify all these areas, and then the news report for that particular day. Then I take all that information and then I turn it into my commentary or what I believe will happen. So I take a look at the previous day's market, and then I identify what happened and the difference between a professional trader, a really great trader, and a newbie, right, or somebody that hasn't been trading long enough, is what should have happened but didn't. And then again, Dalton and Peter talk about this at length. If you can identify something that should have happened but didn't, that to you is an anomaly, right? And you can only get to that particular point with enough price action and enough trading under your belt. Okay, so if you can't do it right now, it's okay. It just takes time. It takes years to be able to develop that. So I look at the previous day, and I just kind of go through it, and I say, all right, this is what happened. This is what should have happened. This didn't happen, and I write that down. Then I have the competitor mindset. I'm trying to get in the head of my competitors, because if you can do that, then you might be able to identify trends and moves before they even occur. Okay. Then from there, we go to again the monthly, weekly, and daily. So from a monthly standpoint, I take a look at what's happening that particular day. From a weekly standpoint, I look at what's going on daily. I look at it, and then information to carry forward. Sometimes you have certain things in the market, and if you don't write it down, you're going to forget. Right? If something happened several weeks ago, you're going to forget it because you see so much price action. But if it's something important that can set up a great trade, then you need to write it down. And then from there, I write multiple hypotheses on what could happen. So this one right here, price opens and continues higher. The first level I want to see is 23.83, which is the high of the balance area. If price rotates above that, then I would expect price to go higher and attempt to test Thursday's high. So I write if price goes up, where am I expecting price to flow to? If it goes down, where am I expecting price to go to? If it goes up but then it stalls some area, where do I expect it to go? If it goes to the bottom, what happens? If it rotates, what happens? So I have a minimum of 3 scenarios, right? And this is perfect for those people that have trading or directional biases, right? If you can look at multiple directions, it makes it so much easier for you to be flexible and to get out of the market if you know you're wrong, right? So for all those people that are stuck in losing trades, this is one of the major things you can do. Write multiple hypotheses of what can happen. Because if you don't write it down, then when you get emotional, you can't be as creative because, again, your mind is already deleting, distorting, and generalizing information coming to you, okay? So you need to do this ahead of time. That's why I do all this before I ever trade every single day, okay? Yes, it is a lot of work, but it's the work that I'm putting in that differentiates myself from 99% of the other traders out there. That's why I make money, okay? All right, question. Without profile, can this level of info be gotten by the gotten from the charts along with the column profile? It's a little more difficult. I've used other charting software before. Thinkorswim doesn't necessarily do a phenomenal job at it. But again, if that's the way you trade, it's one thing. Just because this works for me doesn't mean it's going to work for you. Okay, I'm just trying to give you guys the system and the framework from which to actually draw from and to implement to your trading. Because again, there's no one trading system. There's no one instrument that you have to trade. So this is just what works for me. But I want you to take the pieces that work for you and to obviously make it your own. Okay, and then the last piece. All right, the trading business plan. Now I know a lot of you are thinking, why in the world do you need to make a business plan? Well, because if you don't write it down, then it hasn't manifested itself into the physical world. And until you're able to identify exactly what you want your trading to become, then it's always just going to be a hobby. Okay, so for those of you that really want to become professional traders, where you're doing this on a daily basis, or at least to the point where you're supporting yourself, right, from your trading, then you'll never get to that point unless you actually put it on paper. Okay, so obviously the first thing you need to start out with is a mission statement. What is the mission of your trading? Right, so my mission in trading is to love the process of being my best in creating financial freedom and creating an infinite wealth stream for my family and my charitable foundation. Right, so all that right there is something that I emotionally connect with, and it needs to be something that excites you. And the next piece is goals and objectives. Notice how there's not too many, right? But I talk about minimizing mistakes, right? Because if you focus on minimizing the mistakes instead of being right all the time, right, it makes it a lot easier and more palatable in the subconscious mind. One of the things that I speak about in, I believe it's module 5 of the course, is how perfection is the enemy. Okay, and the reason why I say that is because perfection is impossible in trading. Okay, if you ask anybody, they've never not taken a losing trade. Okay, so it's impossible to be perfect. If you're trying to be perfect, that means you're aiming for something that's unattainable, right? So instead of doing that, you can't be congruent at that point if it's not reachable in your own mind, right? So what you want to do is just focus on minimizing the mistakes as much as possible. And then maintain a profitability rate of 80%. Now this really depends on your trading system. My trading system, I can actually get up to about 80% where I'm actually winning, okay? Because I've gotten to the point where I can identify the trade setups that work best. I can identify the market conditions that work best for each individual trading setup, and then I can execute at a very, very high level, okay? And then earning 10 grand a day. Quick questions. How often are you precise to the tick in height? I would say I'm right. I name levels probably 70 or 80% of the time. If again, you remember I'm doing multiple hypotheses, so I obviously have a better chance of naming a number. It's really just coming up with all the different scenarios and then seeing where the market is and saying, okay, well, this hypothesis has the best opportunity to work, right? So that's how it's easier, because if you've already thought it out ahead of time, it's much easier for you to take action as you see it unfolding. Do you use volume profile for individual stocks? You can. You can use it for basically anything that has volume. Would thinking in percentage returns instead of dollars be a valid objective? Yeah, you can think of percentage returns. Yeah, of course. Yeah, whatever works for you. And then the next section is trading and market beliefs. And again, these are all the, I guess you can say, the beliefs that I have about the market. And actually the very first module is eliminating limiting beliefs. Because I think if you have limiting beliefs, it's like trying to run with a 100-pound vest. on you, right? So imagine trying to do anything and everything every single day with a 100-pound vest. Imagine trying to shower with it. Imagine trying to sleep with it. Imagine trying to cook with it. Imagine trying to go work out with it. Imagine trying to trade with it, right? Until you're able to identify and eliminate those limiting beliefs, you're basically fighting a losing battle. You're swimming upstream. So until you're able to identify and get rid of them, then you're going to have a much harder time. So a couple of them is I believe the market in success leaves clues. Trading is 80% psychology and 20% mechanics and execution after you've internalized your trading system. And that's something someone said to me in an email the other day. They said it doesn't really make sense to focus on your trading psychology if I don't know how to trade well. I agreed to an extent, right? If you don't have any trading experience whatsoever, I don't think you should necessarily focus on trading psychology. You need to be able to get to the point where you've started to understand what your trading system means and what you're looking for, and then at that point start focusing on your trading psychology, because a lot of the systems that I have in place will make your life a lot easier instead of having to fumble your way around in the dark, okay? Because the reason why all this was created was because I needed to create this to become a better trader. So all of this stuff I've used, as I started creating, I said, you know what? This isn't working for me. So I said, I need to find a solution on how to fix this, right? So I would just figure it out, and then I'd look around, and if I couldn't find anything, I'd just make it up myself. I would just create it myself. And so that's why all of this material has come to being, because I said, there was nothing out there that was helping me. I need to make it myself, and obviously it's worked very well. Okay. All right. So your game plan. What you do. How you actually approach the game, so to speak, right? And your game plan is something that you take with you to every game. It might not necessarily work out that way, because sometimes your opponent or the market just doesn't work or doesn't play the way you expect it to. So sometimes you need to come there with a certain expectation, but still be flexible. Okay. So my game plan is if I ever begin to feel anxious, or if I don't feel calm and centered, then I'll fire off my anchor and I'll get back to a calm meditative state. And that's something I speak to directly with regards to overcoming trading losses. I had to develop a system that would allow me to reset very quickly after bad trades. Okay, and as I spoke about earlier, if you don't get rid of that negative charge, then it's going to carry on to the next trade, and then your probabilities of having another bad trade increase, because then you start chasing, you start revenge trading, and then you get into that downward spiral, and then eventually kind of like that amygdala hijacking I spoke about last week, right? It can get really, really bad to the point where you black out and you just wake up more or less later on, and then you realize you've taken a series of bad trades and you're in the hole several $100 grand. All right. And then just a trading strategy. This is just an identification of, the different levels. And again, this doesn't have to be exactly the same. It's whatever works for you. So I want to look at, support or resistance, for entries at these levels: the Globex high-low, previous day's value area high-low, intraday value area, VPOCs, areas of accumulation, open high-low close of the previous day. So I look for areas, that are kind of the areas that I'm interested in, right? And this is basically a 30,000-foot view of your trade criteria. All right, risk management. So for any particular trade, and again, you need to write this down. This is a short one. I've seen other people that have gone for pages and pages on their risk management. It really depends on what you believe will help you, right? Because some people think if it's too long, they're not going to listen to it, and if it's too short, they're not going to listen to it. So you need to have something. Maybe it's bullet pointed. Maybe it's something that you look at every single day before you trade. Just know what you're willing to risk, because that's the only thing you can control. You can't control the amount of profit you make, right? Because the market controls that, right? So you can only control what you actually risk in the market. And then what psychological challenges you have and how you're going to overcome them. What are the daily procedures that you go through every single day? What your education plan is, what your disaster plan is. And again, this is really important. How many of you have actually thought about what you're going to do if your power goes out, if your internet goes out, if you're stuck in a trade? Have you guys already thought about what you guys are doing, or what in other words, is your broker on speed dial? Are you going to exit a trade? Are you going to stay in a trade? So all that needs to be thought about beforehand, because once you get in a trade, you're already emotional. So you need to have something written out before this ever happens, or else it could get really bad for you. Okay. And then lastly, every business plan needs a budget or a pro forma. Okay. All right. So just like last week, we're still doing the promotion. So if you put in the coupon code MENTAL into the website, hold on, let me pull that up in case you guys don't have that. Yeah, so here we are. Just hit premium services, and then over to trading psychology, and there you are. So again, we're giving 20% off, and really $395 is not that much money. It's a really meager investment for all of the information that you get here, and obviously you've seen by the information that I've shared with you today, you get a tremendous amount of detail and the framework and the systems that can really help you become a consistent trader. So I will answer some questions. I think we have an additional 10 minutes or so. Let me know if you guys have any questions. Can I speak a little more about a trading journal? Sure. A trading journal is something that I've always done. Let me see if I have mine available somewhere. At least I have some. Maybe I have one of my students available. Hold on one second. Okay, here's some old ones. Okay. I haven't looked at these in a while, so give me 1 second. Journal. Okay. So yeah, this was his journal. What type of trade it was, if it was the number of trade in the day, if it was long, short, what the quantity was, what the price was, what the result was, at what time, was it a planned trade, and then what the reasoning behind the trade was, right? Why did you get in the trade, and then how you actually felt during the trade. That's really important, right? So he goes into some pretty in-depth journaling with regards to how he felt, because the major challenge is, if let's say if you and I ever work together, I can't understand where your head's at without understanding your thought process, because what my goal is to help you with your thought process. It's the intent of what you're trying to do, because the result can sometimes be positive, but your intent's negative, right? In other words, if you try to get out of a trade early, right? Let's say it's bouncing around break even, and for some reason the market goes up 2 points, and then you're exiting because you were fearful. That's not the correct intent. But the result happened to work out well, but you still did the thing incorrectly. So it's all about identifying the thought process and eliminating the root cause of why you're fearful. And I can't do that without having the reasons why you're doing certain things. All right, so this is basically his journal. Is there anything else in here? And so, I mean, this is pretty detailed. And again, I think you can't I would always err on the side of more detail than not. Okay, other questions? At the end of the day, what do I track? Really, I look at the information that from my daily trading plan. Those 3 pages, and that's all the important information to me in my trading system. What's the 60 to strength? The 60 to strength is something that I created to help me get into the best mental and emotional state I can before every single trading day. Because obviously you're working with a certain amount of, let's say, emotional fuel, right? And you wake up in the morning, if your spouse for some reason looks at you the wrong way, it starts taking away from that emotional fuel. And if you don't have a system or a routine that you can go through that brings you to that highest peak every single morning, then you're starting at a much lower level than than every other day, right? So the whole thing is about being consistent, right? So how can you be consistently at your peak every single day and bring the best version of yourself every single day? So I'll show you that actually next week. I'm sorry, on Monday. I'll actually go through the 60 to strength in the next module. Okay. Are all docs shown as part of the course? Yes, they are. Everything that I'm showing here is in the course, correct. Okay. Can I expand a little on feeling the negative emotions after a series of bad trades and then moving on from them? All right. So as I was mentioning earlier, overcoming trading losses is a huge part, and every trader needs to learn a way. If you don't buy this course, if you don't listen to what I'm telling you here or what I will tell you, you still need to figure out a way to overcome those trading losses. Okay, because everyone's going to have them. So if you know you're going to have them, you need to figure out a system for you to overcome them. Right. So one of the things that I do, I call an anchoring exercise. And what I've done, I've anchored a calm meditative state to a tuning fork, and I actually include a tuning fork in the course that that we provide you, and I show you how to anchor a calm meditative state to that particular sound. So, for example, let's say you get into a trade, and the market's kind of choppy, and you're not really sure, and then you start to feel that anxiousness. Your palms start to sweat. Your heartbeat, starts to rise. You start sweating a little bit, right? At that point, you're starting to lose emotional control, right? Then you can't be objective to the trade because your mind will start filtering, delete, distort, and generalizing the information, right? So how do you get yourself back to a calm meditative state immediately? Well, if you can anchor that state with a tuning fork that I provide you, when you do that, then you're able to just kind of calm down, close your eyes, and then you can reset in a very, very quick manner and look at the trade from a different perspective than if you were anxious. So that's an extremely important strategy and tool that you can utilize when you're trading. Hopefully that answers your question. Are you reaching your financial goal on a daily basis? That's a great question. I have that goal in mind, but the thing is, sometimes the market won't have those type of opportunities that, for a particular day, for a week. That's just I guess you can say it's a carrot out there for me, but I'm not necessarily trying to get the carrot all the time. Because if you're focusing on a particular amount, instead of, let's say, a percentage per day, right, then you can force yourself into bad trades. So that's why my first goal was to reduce and minimize my mistakes to 1 a quarter. Because if that's my #1 goal, then it supersedes me trying to chase trades and just trying to get money from the market when it's not there. Question, your trading journal is quite detailed. How long does it take every day to keep this journal? Same thing with your trading business plan. How often do you go and verify to that extent it is being followed? So with my daily trading plan, I've gotten to the point where I can do it in under an hour. So what I do, I'll fill out all the information on the first 2 pages, and the previous day's market commentary beforehand, and that typically takes me about 15-20 minutes. And then the next day, I wake up and then I wait till we're later in the Globex session, because sometimes the Globex session you're going to have some pretty significant change from the previous day. So sometimes it just wipes out what you've done. So I always wait, till the morning, to start formulating those hypotheses. And by the time I'm done, it takes me about 40 minutes, I would say, sometimes less. And a lot of the information, sometimes it carries over, so I don't need to necessarily do it again and again. Okay. How do you get the historical data on important numbers for months, years back, etc.? Really, it's just whatever platform you have. I know that some platforms and some data services have longer feeds, and it's just identifying which ones have the ones that support your particular type of trading, because options is different than futures, is different from forex, is different from stocks. So it just depends on which one you're looking for. All right, question: why is trading made out to be a psychological battle? Well, it's kind of the same thing if you think about it for golf, right? Golf is not that difficult, right? But it is, because it's all on how you feel on a certain day. You never hit the same shot from from the green or from the fairway every single day, right? It's sometimes a little different, so you need to adjust every single day. And I think what trading really does, it magnifies a lot of the weaknesses in our personality. So that's why a lot of people talk about fear. That's why a lot of people talk about greed. That's why you see people that like to gamble. They use this as an outlet to gamble, right? Because it's very easy for them to to do that. So trading really exposes your weaknesses, and unless you're able to identify and make them strengths, it's going to be more difficult for you to become a professional trader. Question: I know you're offering the course, but is there an hourly session with Ben available if I take the course for additional? Yeah, that's something that Peter and I are identifying. We're going to work together to put together some one-on-one mentoring, as well as maybe some group mentoring. So just keep an eye out on the website, and we'll definitely announce those as they become available. How often do I review the business plan and/or revise it? I take a look at it on let's see here, probably a monthly basis, I would say, and I just say, hey, if one of the trading or market beliefs changes, then I change it. I update it as I see fit. And again, all these documents are really living documents. They evolve as your trading evolves. Are you trading alone or in a small group? I've always traded alone. Yeah, I've always just been. It's just me and my computer. All right, so I'll take 3 more questions. Okay. So when you say minimize mistakes, do you mean minimizing breaking your rules or trading plan? Well, minimizing mistakes, that can mean a multitude of different things. Obviously, following your trading plan, not allowing fear or greed to overcome what you're trying to do, having good intent for exiting or entering a trade. If you're entering a trade because you just lost before and you're just trying to make your money back and you're trying to revenge trade more or less, then that's obviously a mistake. Okay, so it's all about executing what you can to perfection, and not allowing for your emotions to get too in control, or where you lose control of your emotions. Because I love how people say you need to eliminate emotions from your trading. It's not about eliminating emotions. I think that's the wrong way to frame it, because we humans are emotional creatures. So if you're to eliminate your emotions, you're basically saying, I'm eliminating what makes me human. It's about identifying, becoming aware, identifying, and then understanding and beginning to manage, control your emotions. Because if you can do that, then you become a much better trader. If you wanted to have no emotion whatsoever, then you should take your trading system and put it in a black box, and run an algorithm. That's how you remove the emotion. Okay, but I think the thing that puts us above computers is our ability to read context and to have gut feelings and to have just an overall feeling of the market that makes us better than than computers. All right. All right. One more question, and we'll wrap it up. Can I elaborate on the details of the course? Sure. So it's 8 modules. It's just a hair under 8 hours of video. Like I said in the last webinar, it's taken 3 years of Peter and my time to create, and it's really everything that I could put into a course that helps you with your trading psychology. The only other thing that is better than this is if you and I sit one-on-one and I can identify exactly what it is with your habits, with your thought process, and then working on that directly. That's the only thing that's better than this course. Because like I said, I've put in everything that I've ever created in here, into this course. And if you purchase the course and then you actually go through the questions, if you go through and do the assignments, you're going to come out a much better trader, and you'll get to the point where you'll see the market in a different way, and then you're able to be consistent, and then moving towards being a master or professional trader. All right, so I think that's it. Peter, is there anything else you want to say, or do you just want me to wrap it up?
No, I think you've covered everything, but that was phenomenal. I mean, I hope I can speak for everybody else, but for me personally, thank you. I mean, I thought it was amazing. You definitely covered a lot of material in a short period of time, and also gave people kind of a sneak peek, insight into all the cool stuff that's in the course, which is kind of neat. And also, just so you know, all that stuff is very fleshed out in the course. Like, it's not just, the materials are there, but Ben also spends a lot of time in the course talking about the materials, essentially, how all these things work. I know you touched upon, somebody was asking about 60 to strength, and that's not something that we could really show in a webinar, because it would kind of also be like, as far as I'm concerned, like kind of giving away one of the really coolest parts. I think when we recorded the series, Ben, I think, correct me if I'm wrong, but you said that was your favorite module, and it was like your favorite thing. So that's something to look forward to if you do the course. It's fun, getting your 60 of strength together and then executing that to sort of get yourself pumped up to trade and whatnot. But yeah, so thank you so much to Ben. We do have one more of these. This is the series called How to Stop Your Mind from Stealing from You. And number 3 is coming up, is it Wednesday, Ben, or Monday?
It's next Monday.
It's Monday, actually, right? Okay, so the last one's going to be on Monday. And you want to just give people an overview of what you're doing there? I guess you're going to be tying it all together. I know it's called like How to Become a Master Trader, but obviously you can't become a master trader in just one webinar. But maybe you can tell people what you're trying to accomplish there.
Yeah, sure. So what I'll share with you there is my trading flow chart, and how I've identified 3 pieces of your trading. So it's your system and what goes into your system and what you need to understand about your system. And again, it's specifically for mine. You can obviously take pieces of it and apply it to yours. Then your psychology, and then the systems that you utilize. And I'm going to talk about the holistic approach that you really need to take for you to become a master trader. So that'll be next Monday, same bat time, same bat channel.
You got it. All right, we look forward to it, Ben. Check us out at shadowtrader.net. Obviously, if you're interested in the course, under the Premium Services tab, $100 off with the code MENTAL, and we will see you next week on Monday. All right, take care, guys.